Hey everybody, welcome back to the channel. Okay, 2022 has been off to a crazy start for the stock market. 2020 was amazing even though we were in a global pandemic. 2021 was even more amazing even though we were in a global pandemic. And 2022 seems to be just wearing off into the sunset and erasing a lot of the gains that we saw in 2020 and 2021. Now, a lot of investors made a lot of money in 2021, even when they technically weren't supposed to, given there was a global pandemic going on and everything should have been a lot less better than it was. But the Fed pumped so much money and liquidity into the markets because they really felt that if they didn't, we would be in a Great Depression type of era, that they kind of artificially pumped up the stock market. And it was one of the most amazing things that's happened over the past 2 years. 2022 has been quite ridiculous because a lot of those things have been going away primarily due to inflation. This video is not going to be about all the macro level dynamics that are going on for why the stock market is starting to sell off. And I did another video on that. I'll leave in the description if you're interested in that. However, there is another reason that I don't think enough people are talking about. Really, I don't think enough people are talking about it because historically it makes so much sense for why 22 is as bad as it is. And today we're going to talk about it. So when you saw the title of this video, before you clicked on it, let me know in the comments if you guessed what the secret reason was before you clicked on this video. This is it, folks. Midterm years see a large pullback, but returns a year later are great. Look at this chart. This chart is phenomenal. The stock market historically, the S&P 500 index return, which is an index of sort of the 500 biggest companies in the United States, look at the years from 1950 down to 2018. Every year there has been a midterm election, meaning so 2021 we had Joe Biden's first year of presidency. 2022 we're going to have the midterm elections, and then 2023 will be the year after midterms. 2024 is his last year of presidency, and that's when we go into the elections for the new president. There has been an intra-year pullback every single time from 1950 to 2018. And the last time we had midterm elections in 2018, there was a 19.8% pullback. I mean, the stock market dropped 20%. This is the crazy drop that we saw from around August to around December of 2018. The kicker here was the year later were the amazing returns. So 1950, stock market drops 14%, year later 30%. 1954, 4%, year later 43%. We keep going and going and going. The last historical piece of data we have is in 2018, it dropped 20%. The year later in 2019, it was up 37%. So on average, we lose about 17% when there's a midterm election, and then we gain about 32% the year after. Now, the key question here is why is this happening during the midterm elections? And I have two reasons for this that are kind of my two theories and my hypothesis for why this happened. The first theory in general is just that there is a lot more volatility when it's politically unstable. So the market in general, when it's politically unstable, tends to react a little bit worse because governments are in gridlocks. We don't know if certain policies are going to pass. I mean, just look at what happens when Jerome Powell, who's the chair of the Federal Reserve, says one thing. Like if you literally look at the charts while he's talking, if he says something a little hawkish, it'll go down. If he says something a little bit interesting, it'll go up. Like it is actually insane how these algorithms are programmed to interpret the words that come out of the mouths of people that are kind of important. Jerome Powell is pretty important, and then react to it either by selling or buying the stock. So we know that the market reacts to the political scene, and we know that the market particularly reacts to new administrations that pass certain policies. This is why after Trump got elected, we knew that tax cuts were going to be a main part of the agenda, and for corporate tax rates to go from 37% to 21% means a ton of more profits are going to be going back to corporations, which means a ton of more value is going to be going back to shareholders because companies are going to intrinsically be more valuable if they have more money, which meant that the stock market rallied. This is why 2017 up until 2020 was a pretty amazing time for the stock market. The second piece of analysis I have actually came from an article I saw that said presidents and politicians who care overwhelmingly about their own reelection, so Joe Biden in 2024, are more likely to do the worst things they can do, meaning the most politically unstable things they can do in the first 2 years of their presidency. No president wants to pass a policy or negotiate with Congress or be in political gridlock or pass something that they know like is going to help people, but a lot of people also are going to be really bad that they passed it in the final 2 years of their presidency, especially not in the final year of their presidency. That's why when you become a president, you really only have 2 years, right? That's why those first 100 days matter. That policy that you can pass in your first 100 days, that matters the most. I mean, look at the Obama presidency from 2008 to 2016. Not a lot got done, but from 2008 to 2010, that's when he passed the Affordable Care Act. Now, whether you care or you think the Affordable Care Act was a good political decision or policy decision, he was able to get it passed through a really divided Congress. Even though they had a majority, they had to get Republicans on their side. Like it was a lot of tough negotiations to get that bill passed. And after that, nothing else really got passed because, and part of the reason was that in 2010, the Tea Party movement started getting started getting a lot more momentum because a lot of people, particularly the libertarians of the United States, felt that the government was becoming so overreaching to control healthcare policy that it resulted in the Republicans winning in the midterm elections after those first 2 years because the Tea Party movement started feeling and really started getting their ideas out there that the government is becoming too overbearing, especially if they're trying to control healthcare. But Obama was able to get that policy passed. If he tried to get that done in 2011, 2012, there would just be no way it would be possible because he was trying to go for re-election. So that means, and reading from the article, that implies that their first year in office is the best time to make politically painful moves, which won't hurt them in the polls later because after years, people forget about it. And it follows that it's better to gin up the economy in the second half of their tenure, starting around the midterms. This means that after the midterm elections, even if they lose, so if like Biden and the Democrats lose their majority to the Republicans, which I think is not crazy to say is going to happen given what we've seen with inflation and given what we've seen with all the issues and the approval ratings for Biden. If that likely happens, then Biden has 2 more years to get reelected in a world in which the House and the Senate are divided, right? And in which he doesn't have the majority control like he has right now. If that's the case, what does he have to do? The number one thing you can do to get people's money or to get people's votes is to give them more money, right? That's the easiest way you can get people's more votes, to feel as if they have more money. That's kind of why he passed the COVID stimulus package, because if you give people more money, there's a better chance they're just going to be able to vote for you. This is also why Trump wanted his name on the stimulus checks being sent out, because if you see Donald Trump sending you a stimulus check, you feel a little bit more happier to Trump. You're like, hey, Trump gave me some money. I might end up voting for him. So at that point, the year after the midterm elections is where we actually see the value go up into the stock market, because now presidents are generally trying to pass more policies and make the economy better, and markets feel better. Like in general, the stock market feels better because the instability has resided and now we know what's going on. So we know, okay, the House is divided, the Senate's Republicans, whatever. We know what's going on. So now we can focus on actually trying to get a return on our stocks. And that's actually what we're seeing here in this picture, right? So look at this is the Trump presidency. Year 1, 2017, the rate of return was around 5%. Year 2, 2018, 4%. So it went down during the midterm year. Year 3, 2019, we're up at around 13.9%. And then year 4, it stabilizes again. So it's kind of showing you that within the 4 years of being a president, that third year is usually the best year for the stock market, because year 2 is where you have the midterms and year 3 is where you have the rebound. We also want to look at this chart, which is really phenomenal. The S&P 500 index price return 1 year after a midterm election, going back from 1950, 15%. After the midterm elections, your average 1 year return was 15%, and all other years was 6.8%. So when they average the S&P 500 index price return 1 year after the midterm election happens, on average, the year after the previous year of the midterm, you're going to get about 15%. And all other years outside of the year after the midterm election year, which is the third year in the term of the presidency, you get an average of 6.8% versus 15%. That's almost a 8% rate of difference in terms of the return you get, just because it's not a year in which it's rebounding off of a midterm election. So I hope that provided a little bit of context for us to be able to better understand what's going on in the market right now. Obviously supply chain, obviously inflation, obviously the sector rotation from growth to value. A lot of different stuff is happening in the economy right now. It's important to cover and understand all of that stuff, but it's also important to understand that history is usually on your side in the stock market. Like, honestly, if you look at charts, if you look at analysis, if you just go through the research, on average, you start to see trends that seem to follow up. And this was such a fascinating thing for me to understand as an investor, as a relatively new investor that's really trying to understand the market, because it's like, for the rest of my life, there's going to be midterm elections, right? For the rest of my life, there's going to be political instability in the second year of a presidency. So that second year, I should likely expect something to not go as well as it does, because every single year, it has gone down, right? From 2018, it went down. From 2017, 2019, it ballooned. So it makes sense why 2022 it's happening. It's not that it has to happen because it's in line with history. It's because of the dynamics I described above are always going to happen historically. There's always going to be instability. There's always going to be a president trying to pass a really hard policy in the first 2 years, which is going to make the markets crumble a bit more. And then they're always going to want to make it better the year after. That's never going to change. So if that's never going to change, then that means that it makes sense for why it's happening. 2022 probably going to suck, not be that amazing. The question is, how badly does it suck, and how good can we get these prices on dips before 2023 gets the run up, or how well can we handle supply chain and inflation so we make sure 2023 there is an actual run up and it doesn't go like bonkers hyperinflation nonsense in 2022. But in 2023, we can really look forward to a pretty big bounce historically if everything else seems to remain in place. So really interesting stuff. Let me know what you guys think. Did you guys know about this before? I obviously knew that midterms played a role, but I didn't know they played that much of a historical role, and it was really interesting to find it out. So yeah, thank you guys for watching. Looking forward to your comments, and I'll see you in the next one.